Bernd. Thanks for the opportunity to be here. For those that don't know me, I'm an advisor and used to run an investment fund. My focus is really on where technology drives disruption or radical innovation within traditional industries. And I think this is an interesting time because certainly not just AI, but blockchain and many other technologies are having a fundamental impact, not only from a risk perspective, but also a capital allocation side. And I think that's the topic of the conversation today is really about AI, blockchain, and other technology infrastructure and how that is having an radical impact on a number of different industries from manufacturing to engineering, etc.
Hi, David. So here we go. Brendan, we have David Doss joining us from Davos. And so we will turn this over to you guys to have your panel. David, thank you so much for joining us and hope the weather in Davos is keeping you up and about.
Thank you for having me here.
Hi, David. Nice to have you here. I did a small intro. Maybe you want to do the same, but it would be good I'm looking forward to speaking to you in terms of, the AI, blockchain, digital assets, and how that's impacting the fund management side and also the investments made by companies because it's driving innovation across multiple industries.
Yes, absolutely. Hi, Brendan. Hello, everyone. Greetings from snowy Davos. Apologies for the slight delay here. It's a little bit hectic in this tiny little alpine village here. But yes, so briefly on myself, I'm David Doss, and I am a partner and board director for ChainBLX and the founder of CKC. So ChainBLX is a fund collective, essentially a fund launchpad, under which there are multiple emerging fund initiatives, including CKC, which I founded, which is a digital asset hedge fund, as well as the ART Fund, Advanced Real-Time Technologies, which is an AI and blockchain infrastructure fund focused on the applications in the media, as well as the SCC fund, which is focused on essentially a horizontal distribution or horizontal integration around health and wellness in emerging markets. And I come in there with the blockchain perspective on how to be helping those projects.
Maybe you want to talk a little bit about how these technologies are becoming mission critical versus speculative in the sectors. I mean, I think we all know about generative AI. Everybody knows about the I won't mention the names, the famous AI companies that the people ask to make images or write poems, but those are less mission critical. Maybe you want to talk a little bit about how these technologies are becoming absolutely mission critical, and how you see that from the investor perspective.
Absolutely. So coming from the digital asset hedge fund perspective, firstly, there are a number of different areas that are relevant. So one of them is the essentially assets that intersect between blockchain and artificial intelligence. There is a lot around, for example, agentic blockchain protocols, such as X402, where essentially AI agents can have permissions to make transactions on individuals' behalf in a Web3 decentralized environment. And so that is a use case for automated purchasing, automated trading as well. And that is an area where there are investable assets. Some of them may end up becoming quite instrumental in the coming years. There are also initiatives around using blockchain for essentially AI for blockchains to help better governance around blockchains. For example, decentralized autonomous organizations in the blockchain environment need to become exactly that, autonomous. And so agentic technology is something that is increasingly adapting into a lot of these so-called layer ones within the blockchain environment that are essentially the cornerstones of the blockchain arena. As on the other side of the crypto use case is, for example, using AI for automation and trading. That is still as yet proven. There's possibilities for a number of upsides there, but there's also real risks around an agent making massively bad decisions, for example. So still uncharted territories. Briefly on the AI and blockchain infrastructure initiative, ART, or Advanced Real-Time Technologies, that is a huge intersection as well. For example, applications for use of AI in the media. Let's say, for example, if there is a usage of an image and likeness of a celebrity, right? That could be an authorized image and likeness or an unauthorized image and likeness. Blockchain can help those deep fakes essentially help to authorize what is approved, what is not approved. It can also help for settlement of micropayments around the usage of the approved technologies. And on the health side, lastly, there is a lot around the use of AI around the analysis of data and essentially provenance questions of where various medicines, for example, in a blockchain system are being tracked, and predictive analytics around potential issues or potential fraud. So really a very wide-ranging use case set there.
Very interesting, because I think, I was on a conversation earlier about blockchain in the use in terms of data sovereignty, and data sovereignty not just at the national political level or regional level, but also within companies. And I think one of the things that this is across industries. It's you mentioned healthcare, but mining, critical minerals, energy, manufacturing. There are many industries where this technology and the concept of a secure, trusted data access is critical. And I think one of the things which I think is important is in terms of creating long-term value. Almost, I don't want to say the models are not important, but they're becoming commoditized. And the long-term value potentially comes from not only the energy consumption, how you can secure that, but also the data access, because it's increasingly common knowledge that the public internet is being consumed by a lot of the AI engines out there, the LLMs, but increasingly to grow and to expand and to add more value, you need AI engines models need to get access to non-public data sources, and that has to come through trusted environments. There is so data access, governance rights, usage rights, not to mention intellectual property and things like and the capital structures that go around that. Do you acquire it? Do you set up some kind of commercial arrangement? So I don't know if you want to talk a little bit how you see creating the long-term value beyond, I'd say the model technology.
Yes, absolutely. So there are, you raised some great points there, Brennan, and I would say that sovereign data, whether it involves blockchain or not, has been a huge theme here in Davos this year. There's a lot of movements, in particular from several Scandinavian governments, for sovereign usage of AI. If we think through the types of supply chain issues that we saw during COVID in the real world around supply chain, there is increasingly likely to be a battle and a tension around supply chain in the virtual world around, as you said, where data is sourced, how it's being used, and are those systems end-to-end private? Are they controllable? Right now, we're seeing privacy as a real issue in AI and blockchain, and likely to continue to be one. And just remembering in Silicon Valley, say 10 or 15 years ago, I was hearing a lot of investors and a lot of companies saying privacy is dead. And then we saw during COVID that online attacks started doubling every year. The instances and the dollar value of online attacks and scams have been doubling every year roughly since COVID, more or less. And this is something where Apple has come out and said, you deserve privacy. A lot of really big voices, and is no longer something that is stigmatized or seen as an edge case. So certainly sovereign sovereign AI, sovereign data, privacy, interacting themes. To your other point about the real world value of this, I see a lot of legislation around the world, in the US as well as many other places in the world, around AI, privacy, blockchain, cryptocurrency that are starting to come up here. And as we see some of that develop, I believe that we will see a critical mass of larger enterprises seeing the types of environments where they can really come through and invest into this type of infrastructure. I believe that we'll start seeing more value around sort of the major Fortune 500 companies investing into these types of technology as the regulatory environment clarifies and sharpens. And with that, though, also, I believe that we will continue to see a bit of technological leapfrogging here, where really it's a lot of the small states, the small nations around the world that are basically developing this a lot more. Excuse me, by the way, that this is a tiny little alpine village here with 40,000 people. So it's hard to find that privacy that's that I'm talking about here. So it's a little bit noisy from Spain. But
I think if
yes,
there's one one time in the year when you can say Davos is crowded, it's probably this week.
What's that?
Yes. So 8,000 person village, 40 or 50,000 people here. So there's a huge presence of governments, etc. And it's definitely full of energy and maybe a little noise. But yes, hopefully some of that that adds a little bit of clarity to your question amidst the background noise.
You're talking a lot about crypto, you're talking about blockchain. I think that these are technologies, I was saying this earlier on a different conversation about, these technologies have been around for a while. And I think it's the business world that's now catching up to the application of this, and it's starting to become more mainstream. The capital markets are paying attention to it, and that has a positive feedback loop. The more capital there is, the more innovation there is, the more innovation there is, the more the capital looks at it. And I think, there are great examples, even in things like critical minerals, where 6 months ago or so, there was a $42 billion fund set up, backed by gold in Switzerland, and with a crypto token, asset-backed crypto token associated with it. These technologies are now not just being seen as innovation for the technology, but I think people are starting to understand, and companies and investors are starting to see how these technologies can really be applied in industries where they've historically not been applied. And I think that's probably where the real growth comes. And that's my sort of passion, is where the technology drives the innovation and the disruption, because that's where there's challenge, but that's also where it creates the opportunities. What do you see as the primary barriers to institutional capital being deployed today in these environments?
Yes, well, firstly, you raise a great point, Brendan, about real world use cases, institutional use cases, that real world asset. Can you hear me, by the way, or is the background louder than I am?
I can hear you, but the background is getting louder. Let's put it that way.
It's getting louder. Okay, that is fair. Right. Let's see. Well, I'm going to try to mobilize. All right. So yes, is this any better here?
Much better.
Okay.
Yes.
So it's a little bit quieter. Okay. Well, to answer your question on on real world use cases, institutional use cases, according to analysts, even many years ago, analysts at Citi, at the WEF, various other major policy centers, real world asset tokenization is slated to take off into a multi-trillion-dollar market by 2030. And here we find ourselves in 2026. There's still a ways to go, but we definitely do appear to be hitting the critical mass required for that type of escape velocity, as it were, in those arenas. It does come down to some regulation that gives those institutions the confidence to start moving these trillions and trillions of dollars of assets. But with that being said, in terms of real world value, the real breakout use case over the last couple of years in the real world asset tokenization arena is actually the stablecoin, the dollar. This is something that has real policy, politics, economics implications in globally, really. So we see, for example, that essentially the leading stable coins, which are a tokenized dollar, a tokenized real world asset, are buying up US treasuries. And these are soaking up some of the demand that has been slacking from some of the more traditional purchasers of US treasuries around the world. Also finding that it's enabling, say, cross-border payment and settlement, remittances, other related areas. And so the point there being, we are already seeing, in many cases, hundreds and hundreds of millions of dollars a day in volume moving through this. The other component that provides institutions with more confidence is the throughput question, which even if I would say 5 years ago, certainly 10 years ago, there were only, say, a number of transactions per second that could be processed. Now it rivals the number of transactions per second, depending on the blockchain, rivals that of a leading network such as Visa or MasterCard. So the scalability of the technology really has grown in leaps and bounds over the last many years. Ultimately, to your point, this has been around for a while. We haven't yet necessarily hit the so-called iPhone moment yet with blockchain and cryptocurrency. For the mobile age, it was the iPhone. For AI, it was ChatGPT. For blockchain, I would say that age hasn't quite yet come, but we are hitting a lot of the infrastructural, technical, and policy boxes that are required for that type of an iPhone moment. And once those are all in a row, it's hard to tell what exactly will be that is that last straw that kind of that unleashes things. But we are getting to the point where the conditions for that last straw are being prepared.
I think it's interesting because I actually wrote an article a couple of months ago on the whole concept of real world asset backed tokens versus revenue share tokens, etc. And I think you're right. I think there's and also what is interesting is the accounting rules in major jurisdictions are also being adapted to make this more accepted in terms of the way to account for these investment vehicles on balance sheets and within funds, etc., which I think is an important step as well to enhance the industry, or at least to support the industry and make it more acceptable. And in doing so, it allows bigger, more institutional investors to become active in the space as well.
Yes, absolutely. You raise a great point. The tax and custody issues are another aspect, and we're starting to see more clarity around taxation nationally and globally. We're also starting to see more clarity around how to properly solve for crypto custody in traditional formats as well as in more sort of innovative formats as well. Those are great points. That these are other key drivers.
And certainly in a real world environment, the custodian issues around the real world asset, and are they still there the day after, and or have they been seized? And you come back to things like sovereignty. Are the assets still there, and where are they, and are they safe, and how are they insured, etc. So I think that's an interesting angle, but probably another conversation which we can have in some level of detail.
Right.
What do you see the technical?
Panel, yes.
Sorry. What do you see
I
as
was just saying, I was just agreeing.
What do you see as some of the maybe technical or commercial challenges that still need to be proven or overcome before this becomes mainstream? Are they more commercial or are they more technical? I would guess more commercial, but what's your view?
I see the challenges as more on the commercial side. At the moment, the technology is already quite capable, and in terms of the commercial side, it's a question of greater institutionalization. We have a backlog of, for example, 150 or so ETF products just in the US alone, pending approval around the blockchain and crypto arena. And so that is something that, if even a third of those are approved, is something that could really create really enormous flywheel effects that can help in some degree to help to provide more assurance to institutions, as well as, let's say, less technical retail investors around custody, where if there's an ETF that's responsible for some of the custody, to your point, that could ease things. But then always the technical could be better, could be clearer as well. There is still, I would say, a user interface issue. This is not there in part there is still upside because it's not user friendly, right? So we haven't yet hit part of the iPhone moment is the commercialization, and part of it is the interface helps the commercialization. Really, to your point, it's a chicken and egg question, right? That iPhone example is really a great example of part of what we look at in the art initiative around patent-backed infrastructure investing in blockchain and AI. Because with the iPhone, certainly Steve Jobs, had incredible talent, incredible vision, right? But his initiative was built on the back of science, endowments, patents, research, government grants, not just his, but decades of these types of innovations built up over time, right? And so if from my perspective, from the investment perspective, if we can invest into the growth of those of that entire environment, once that iPhone moment does hit, we as investors can be prepared to properly gain value from it, but also to properly catalyze that event. And then once there is that more developed technology, more developed commercialization, then that iPhone moment can come.
I think also, Apple always had potentially a very strong supply chain, but what they did was with the iPhone and not forgetting what Android did also in terms of on the Google platform, is they created an ecosystem as well. It wasn't just about supply chain, but it was creating an entire ecosystem where there were commercial models where everybody, not equally, of course, could participate potentially in that ecosystem, not only from the hardware, but also from the software side. And in whole, probably, there is a lot of benefit from the ecosystem that was created by both of those initiatives. What do you look at in terms of, you're also a fund manager. What do you look at what would you tell people on this who look at this session or the recording thereof, that you look at specifically when considering an investment in this space?
Yes, certainly. So and I think there's a bit of a lag here, by the way, just noticing when I start to talk. So if I interrupt, it's only partly because I'm rude. But yes, as far as what we look at in terms of due diligence, asset evaluation, and such, on the liquid hedge side, with basically more hedge fund style of investment, it comes down to in our view, primarily fundamental analysis. Is this an asset that has utility, a use case? Is it something where, while there isn't the same storied legacy of price per earning ratio and stuff like this in the digital asset space, there still are, at the end of the day, real businesses in the blockchain and crypto arena that earn real revenue, right? And so how can you look at that and see the price of an asset relative to the monetary value that it is creating, and is it overvalued? Is it undervalued? These are exercises that can and should be implemented. On the more equity, venture and growth side of the investing arena, it comes down to what we look at is really the value of intellectual property. Is there a patent for this? Is that patent something that has commercial viability? Is that patent something that can be developed in such a way that even if a particular project or initiative fails, which in early stage investing, inevitably there are failures, right? But if it can be developed such that the patent itself is an asset, then what we look at is essentially, can that be a way to have more of an asset-backed style of venture investing that can de-risk for our investors? And then also, is this something where, for example, there can be a way to join forces with other organizations, right? Classic examples, say PayPal was originally two companies, right? Are there other people in the space that are doing similar things? Do we have a patent for it that they are perhaps infringing upon, rather than, say, more of a punitive type of strategy? Is there a way in which there's an opportunity for both us and competition to join forces in a way that can be additive to both, and additive to the value that can be created in the space, rather than purely a zero-sum interaction?
To try and find synergies rather than become a patent troll, I think is what you're trying to say. If in those sorts of environments.
Yes. Yes, absolutely. Absolutely.
Just one last
There's
question,
too
because I
much,
think go ahead.
pardon, go ahead.
Yeah, I think the latency is getting to us, at least in terms of the
Yes,
communications.
exactly.
But I had one more
Exactly.
question. Data has huge value. Everybody knows that.
Mhm.
The thing with data, though, is it's
Yep.
typical assets, like on a stock exchange, whether it be a stock certificate or a product, it's rival. The ownership transfers, and it's unique. One of the challenges with data, of course, is the fact that you can sell the same data set to multiple people, and it can have different values to different people, because it depends on
Mm,
the context, the application that it's being
right.
applied to, et cetera, et cetera. And I think that's
Right.
one area where maybe you want to comment on some of the opportunities and risks that you see, where versus when you have a digital product like that, where you're selling the data potentially, or you're monetizing the data as opposed to a physical product.
Right. Well, that's a great point in general around value creation, right? There's the classic example of water from a tap. It's 1 cent from a bottle. At the grocery store, it's maybe 50 cents from a bottle in a vending machine. It's $1 from a bottle at a fancy restaurant. It's $10, right? So definitely data and context are very important in a similar way. In terms of how to be solving for the, say, it's ultimately a bit of a privacy question you're asking, as well as a contextualization question. Is that fair? Or
More on the contextualization side.
contextualization? Yeah. So in terms of the contextualization of data, and this is something where right. So that's a bit of a synergy of blockchain and AI, right? So the contextualization of data, something that with a blockchain type of environment could allow for, let's say, having one's own data plug into a separate system in such a way that you can essentially use your data without sort of sharing it unduly with others. In terms of the contextualization, and I would say that's
I
more
think you
relevant to
also
part
can
of
give
what we
it,
do.
you can have multiple
Yeah.
people accessing the data and paying different prices for that access, right? It creates a
I see.
marketplace
Okay, yeah. So
effectively.
Yes. So that is a great point. So the contextualization of data, so that's a great way to look at it. The contextualization of data, for example, in this instance of AI and media, we're mentioning, say, the usage of image and likeness, right? Is this image and likeness being used by an AI that is simply for personal use, right? Where you're thinking up a TV show that you want an alternative ending to, and you're willing as an individual to pay $1 for a fun alternative ending to Friends or to Game of Thrones or what have you, right? Or is this something where the data is going to be used by a corporation that's then selling this commercially, right? That type of tracking of the provenance of the data and where the data is going is something that blockchain can help with, of basically saying there's a smart contract, this data can be used by one device for personal use, or this data can be used by many devices. And there are different pricing models that are executed depending on which of those instances are executed. That to a great point, Brendan, that the blockchain component can help with that commercial contextualization.
Well, David, I think we're running out of time. I wanted to thank you. Obviously, I'd love to carry on this conversation maybe when you're back from Davos and you have a little more time, talk about some of that real world asset crypto tokens and in the applications in energy and crypto and critical minerals and other things. Do you want to say one more thing before you probably have some fancy cocktail party to go to?
Well, thank you, Brennan, and thank you, Anand, for moderating and organizing and hosting, respectively. And thank you to those listening for your patience with my little alpine adventure here. It's a little noisy on the go, but definitely a lot of amazing people and amazing insights that looking forward to integrating here in the year ahead. As far as just any last words here? Well, they have some last words to share as well, but as far as last words to share on my side, I would say that if 2025 was the age of the GPTs, the LLMs for AI, and the age of the digital asset treasuries for blockchain, I would say 2026, the themes that I'm looking forward to and that I'm seeing here on the ground in Switzerland are for AI. It's really the layer 2, the applications. What applications are going to be built on this, as well as the sourcing of basically what comes before the LLMs in terms of the sovereignty of the data centers and such, as Brendan pointed out, but what comes after the LLMs as well, of what applications can contextualize and really create value, right? So those are the key themes I'm watching out for as a technologist, as an investor on the AI side. On the blockchain side, what I'm watching out for is the institutionalization of digital asset investment, sovereign wealth funds, state and national treasuries, endowments, all starting to really move into this space from a more medium to long-term perspective, not from a ultra high leverage day trading perspective of speculation, but from a medium to long-term perspective of investing. And then relatedly, the other part, lastly, on the blockchain side, is how can blockchain become the rails of real world value and the rails of keeping AI in track, of potentially helping to avoid either hacks or scams or fraud on the AI side, and or avoiding perhaps more of a potential Terminator type of situation on the AI side, of really keeping us in line and keeping the AI in line. And so I'm looking forward to seeing how that all develops the year ahead.
David, thank you for your time, sir. Enjoy your evening there, and yeah, let's carry on the conversation when you're back, because I think there's a lot still to be discussed. Thank you for your time.
Certainly. Absolutely. Thank you. Thank you all.